Imagine having the inside scoop on the stocks that Congress members are buying. Yes, you heard that right. We're talking about the very stocks that those in the know are snapping up. And guess what? My adopted golden retriever Winston sniffed out some incredible research for us. So grab your notepad because you won't want to miss this. You're wondering, who is this guy? Well, this guy's teaching portfolio is up about 60% so far this year. And if you want to know exactly how we do that, I'll give you the entire strategy for free. Come and join our exclusive live trading session next week at felixprehn.org/webinar and learn every single step, including the automations, for free. Now let's get into the meat of today's video. We're going to explore 3 stocks here that Congressman Kevin Hern has recently bought. But first, why should we care about what Representative Kevin Hern is buying? Well, he sits on the powerful Ways and Means Committee, which is crucial for budget decisions, government spending plans. This gives him unique insight into where the government is likely to allocate funds that can be incredibly handy if you know which stocks to buy. Hern is also a member of the subcommittee on select revenue measures. I know it sounds exciting, but that further enhances his understanding of fiscal policies and their impact on various sectors and specific companies. Now let's talk about the first stock he's bought. But I'm not going to reveal their name just yet. Let's build a little bit of suspense here for fun. This company has a gross profit margin of 12%, which isn't amazing. Brings in about $70 billion in revenue and makes a profit of just shy of $7 billion. But what I do really like about this is that it has a return on invested capital of an impressive 29%. That means they invest $100 in year 1, they make back $29 on that investment. That's pretty impressive. So it indicates that this is a very profitable and efficient business. But what do they actually do? This company is a defense giant known for its advanced missile systems and aerospace technology. Its products are in high demand due to escalating geopolitical tensions, as we should call it politely, wars. You get the idea. So in the first quarter, it surpassed market expectations driven by high demand, and they built systems like HIMARS in GMLRS. Any guesses yet? Yes, of course, you're right. It is Lockheed Martin, ticker symbol LMT. So with recent geopolitical events, such as Russia's invasion of Ukraine and the growing concern about just pretty much everywhere in the world, it makes Lockheed Martin a very solid investment right now. And if the chaps who sit on the Ways and Means Committee think more money is going to flow in their direction, I will not question that. I take it on face value. So now let's move on to stock number 2. Again, let's start with the fundamentals. They have a gross profit margin of 54%, so much, much better. Revenue of $14 billion, of which about $3 billion is profit. Return on invested capital is 20%. Pretty impressive, right? They are a major player in the energy sector, particularly in natural gas and oil production. And with a potential Trump presidency, we could see a resurgence in policies favoring domestic energy production, which could benefit this company significantly. In fact, Trump said the very thing. He wants to significantly increase US oil production and therefore bring the price of gas down at the pump, because that's the one thing that makes politicians beloved. Any idea who it is yet? Any ideas? Put it down below in the comments, but you're too late. It's Devon Energy, ticker symbol DVN. And it's got pretty strong financials, potential policy tailwinds, which makes Devon Energy very, very well positioned for growth here. So I like it. I understand why the honorable politician is buying it for no personal gain at all. I mean, he's thinking of the children. Now let's talk about stock number 3 here. This company has a gross profit margin of 26%, which is all right. 14 billion revenue, which is quite a lot. Only 1 billion in profit though. So what are they doing? Well, return on invested capital, 17%. Pretty decent. So okay numbers overall. And they are a leader in agricultural equipment. Now, a Trump or a Trump VP candidate presidency, rather, with a very strong focus on domestic agriculture and made in America policies could significantly benefit this company. Increased investments in domestic farming and agricultural infrastructure would drive demand for its products. Can you guess the name? It's not the one I was thinking of. I wasn't really massively familiar with that one. It's called AGCO Corporation, ticker symbol AGCO. Decent fundamentals, potential policy support. It makes it a reasonably compelling investment opportunity. I'm not hugely in love with it. I'm more familiar with Deere & Co. As a company, which I do like, but who am I to question the mighty, right? Now let's break down some of these financial terms that I was talking about. Just appreciate not everybody understands what they are. So the gross profit margin is the percentage of revenue that exceeds the cost of goods sold. It's basically a measure of how efficient is a company making its goods. Revenue, it's all the income that comes in from sales, and net income is basically profit after all expenses have been deducted. And then the most complex ones we talked about here, return on invested capital, ROIC, measures just how well a company is using its capital to generate profits. So you have an ROIC of 30%, you invest $100 this year, next year you'll make $30 profit on that. In year 2, you might again make $30, and so after 3 years, you basically paid your investment back, which is pretty impressive, right? Try doing that with, say, real estate. It's a pretty hard thing to do. Kevin Hahn has a track record of picking winners. For instance, his purchase of OKE, a natural gas producer, made him 11.5%. And he's got insight that is very, very valuable. And that's why we're paying attention to his recent trades here. Now, let's address the elephant in the room, the ethical and the moral issues surrounding politicians trading on insider info. You see, while you and I might get a slap on the wrist, or worse, for insider trading, we'll probably go to jail, our selfless politicians are allowed to trade on information that isn't available to the public. Sort of makes you feel warm and fuzzy inside, doesn't it? Under the Stock Act, members of Congress are required to disclose their trades within 45 days. This law was supposed to increase transparency and prevent insider trading, but let's be honest, it's like asking a fox to guard the henhouse. They still have access to non-public information that can significantly impact stock prices. And let's not forget, these disclosures are often buried in paperwork that the average person doesn't have the time or resources to sift through. But don't worry, Winston and I have done the heavy lifting here for you. So we've sniffed out some of the trades that actually matter and help you make better decisions out there. And remember, our portfolio is up over 60% so far this year on just trading alone. If you want to know how we do it, I'll give away the entire structure for you free of charge. Just come and join us at felixprehn.org/webinar next week. And I thank you for watching. Keep joining us. If you want to see the trades that Winston sniffs out for you, smash the various buttons, and I look forward to seeing you on the live trading train. Take care. Tom Lee famously just predicted a 15,000 point S&P 500, so I dug deep into his research and I'm about to unveil to you his top 5 stocks.